All right, everyone, this is Matt Langland coming to you with our second video in our series of demystifying private investments. Specifically, this video will be analyzing a little deeper on buyout funds, which is a sub-asset class of private equity. Feel free to reference our first video and our first article, which speaks a little more at a high level of what exactly the private investment universe is, along with some different ways to access it and who exactly it's for. So, before we dive in, I want to quickly remind everyone of some of the different asset classes that make up the private market universe, such as private credit, infrastructure, real estate, private equity, and this particular video will be focusing on buyout funds, a sub-asset class of private equity. Now, before we go any further and we start talking about some of the things that makes buyout funds popular, I want to quickly just remind everyone of what exactly buyout funds are. And the easiest way to do that will probably be with an analogy of buying a fixer-upper home. So imagine that you were looking at houses in a neighborhood where the average home was selling for $750,000, and you found a fixer-upper home in there that you could buy for $500,000. And you do some analysis and you realize that if you put 20% down of your own money and you get a loan for 80% to buy the home for $500,000, and with $50,000 of improvements, redoing the kitchen, redoing the bathroom, you could then sell that home for $750,000, $800,000, giving yourself a $250,000, $200,000 profit. Well, that's really sort of at a high level how buyout funds are working, except instead of homes, they're doing it with privately held businesses, privately held companies, where they're going to go in and use a mixture of equity, cash, and debt, leverage, to buy these different companies and flip them for a profit down the road. And so going with that, we've seen that this type of investment of sort of flipping, for lack of a better word, privately held companies has grown in popularity immensely since 2000. So we've seen, funds flow into the buyout space at a rate of 3.5 times that of the public equity market. And there's a bunch of different reasons for that. One being is historically, you can reference our first video, but the strong historical double-digit returns that you can find in the buyout fund space are very attractive. When you put illiquidity in terms of the lockup of these funds, holding on to an investment for anywhere from 3, 5, 10 years, along with leverage, we should hopefully be able to create a larger return for us than maybe a mature, publicly traded, liquid stock market investment. Along with that is, as a reminder, one of the bedrocks of investing is going to be asset allocation. So finding multiple return streams, multiple return drivers that can potentially deliver you strong returns, but that are uncorrelated or not related to each other. So just because one does bad doesn't necessarily mean that the other one will do bad. And buyout funds are pretty uncorrelated to the public stock market universe. Because of that, this is looked to as a strong return potential that is uncorrelated to the core holdings in your portfolio, which will be made up of public investments, which is why that we've seen institutions and other sophisticated investors over time pump more and more money into this buyout fund space. Now, building off the previous slide, in terms of what makes these buyout funds so attractive to people, is a slide that's going to show, the valuations of publicly traded stocks, which is represented by the Russell 2000 here, so U.S.-based stock, which is in this pink line, and privately, held companies, leveraged buyout funds, both U.S. and European based. And you'll notice this big spread here, 6 to 7 times, in terms of what the valuation is of U.S. based stock to privately held companies. As a reminder, over the last 10 years, we've seen this huge run up in terms of U.S. stock return, which has been fantastic to see. However, because of that, there's very rich valuations in the publicly traded stock marketplace for U.S.-based companies, which concerns us in the sense of, okay, well, if valuations are this high, and if you believe that valuations and fundamentals matter in terms of investing, well, then what's the return potential and the runway for these to continue growing over the next 5, 10, 15 years? And so if you're concerned with the level of valuations you're seeing in publicly traded stock, and you look at the valuations, the much smaller valuations in terms of privately held investments, well then, these lower valuations would make us think that there should be a longer runway of higher return streams in the future. Now, this spread, to be fair, is a little bit of an apples to orange comparison in the sense that we're not going to just see that the spread of privately held investments just shoot up and meet where U.S.-based stock valuations are. But what it should start to paint the picture of is the potential runway that we can still find in these buyout funds and the return characteristics that we think we can find in the future and going forward. Now, just because we like a lot of things that make buyout funds attractive, I think that this slide, in terms of the maturing marketplace of buyout funds and private investing in general, is important to notice as well. And as a reminder that the private market universe as a whole is about $6 trillion, with buyout funds being the most popular, making about half or $3 trillion of that private market universe. And in comparison, the public market universe, so that's public bonds, public stock, is over $200 trillion in terms of comparison. And so as these investments become more and more popular and people start shifting more and more their allocation of their portfolio from public investments to buyout funds and private investments, as the marketplace matures, it should be a little harder to find those return characteristics. Going back to the idea of fixing homes, if you're trying to find fixer-uppers to turn a profit on, if 100 people are bidding on every single home that you're looking for to flip and turn a profit on, it's going to be a lot harder to find those inefficiencies where maybe there's a nice baked-in profit for yourself. And this slide is really representing that in a different way. So since 1999, on average, we've seen return characteristics of buyout funds globally drop about 6% since 1999. So as more and more money and more players go into the marketplace, it's been harder to find those inefficiencies in the market and find those levels of return that maybe were a little easier to obtain even 10 years ago, which is represented by the blue line here. That being said, which is interesting, is you'll notice that the big dogs in the industry and the top quartile of buyout fund managers have been able to do pretty well and be able to maintain those similar levels of return. Now, there's a couple of reasons for that. Is they have access to more capital, they have access to higher levels of deal flow, which makes them a little more appealing in terms of being able to be the first bidders on particular investment opportunities. And this is really why it becomes so important to deal with someone such as Denver Private Wealth Management to do the due diligence on the front end before you just throw money into the buyout fund universe hoping for a good return, because you need to make sure that you understand what the edges of that fund manager that's going to make them be able to find an efficiency and be able to deliver you those levels of return that you're hoping to find. As this marketplace continues to mature, understanding what a different company's edges over a different fund manager is going to be incredibly important. So I hope this gives a little bit better understanding in terms of what exactly the buyout fund universe looks like and what makes it so popular. And please stay tuned to our future article series and video series, which is going to be speaking about the other asset class within the private market universe. As always, please feel free to reach out and ask any questions you may have about how this might fit into your particular portfolio. We're always here to answer any questions. Thank you.